So if I move into some of the background and content to this discussion, the very first thing we found when we started planning for this event was that not only do the practices around assurance vary around the world, the practice for audit varies, and we felt that it would perhaps be very helpful to set the scene before we get into the insurance services market as to the different environments that these guys are all coming from. So I've asked them each to speak about the audit background in their country just for a couple of minutes, which will, I think, help you understand the differences we have in audit thresholds, when those thresholds were introduced or were raised significantly, and the kind of services that is provided in their country to SMEs that are exempt from audit. If the technology is working nicely, we probably have a summary slide as well. We'll see. In the meantime, there we go. That's our panel, and there we go. That's to summarise and remind those of us on stage where we are. Philippe, perhaps if I can start with you for the background to the audit position in France, please.
Yes, thank you, Sue. Well, it will not be an easy role I have to play, as I have to play the French here on the Anglo-Saxon world. It's like to play rugby with British or Australians or New Zealand. Yes, you guys invented the rules, and we are applying all the same rules, but maybe it's a bit different. That's what people call the French touch. So I will try to have the French touch on that debate. Well, actually, we have an experience and a good practice of auditing the small and medium-sized enterprises, since always, like the French regulators and French public authorities thought it was a good idea to apply the audit. So, of course, there is some thresholds, and what appears on the screen is that for a limited company, the threshold is of 3.1 million euro, what is much more lower than the European threshold, and the half of that for total assets and 50 employees. So we have a vast number of small companies audited by practitioners, by auditors who make a difference between chartered accountant and auditors, especially because in that case, what is advised and non-audit services is fulfilled by the chartered accountant. So I'll come back later to that, but we have two kinds of separate professional providing services to the SMEs, and the role of each is clearly defined.
Stuart, the Australian perspective.
Thank you, Susan. I did a little bit of research before I got here when Susan asked me the question of how many, or what were our thresholds. And it turned out that we have 4 federal acts of parliament which set different thresholds under different acts. We have 8 state acts which also set different thresholds. So when you ask the question, what's our threshold, it depends on what sort of entity are you and which state or which act are you doing the assurance under. So it's not an easy question to answer. I'll limit my response here really to our Companies Act, which only covers companies. So it leaves out partnerships and trusts, which are probably the majority of the entities that SMEs use in Australia. Back in 1995, which seems a long time ago, the federal government introduced in the Corporations Act thresholds for the first time on audit. And they were effectively $10 million revenue, $5 million assets, and 50 staff. On top of that, they also abolished the need to prepare financial statements, annual financial statements, for small proprietary companies. Well, that really threw the profession in a fin. We thought the world was coming to an end, that there'd be no more work, but life did move on, and it never really caused us any impact at all. In fact, if anything, it made our practices more profitable. Then in 2007, those thresholds were lifted to 25 million revenue, 12.5 million assets, and 50 people. And it was passing any 2 of those 3 tests. Well, by that stage, that change went through, and I don't think anyone even noticed it happened. It was sort of so far after the event, we'd got used to it. And SMEs in Australia have very few cases of having audit unless there is a need, a dispute between the stakeholders or something like that. Shareholders have reserved the right that they can request an audit of the company, but that right is very rarely exercised. Sue mentioned banking earlier. Banking didn't fall away. We're still very prosperous. Companies still have no problem in borrowing. We don't have any more companies failing than anyone else. So I've got to say that it was a bit of a non-event. So for many of you out in the room, there is life after audit if you choose to go that way. The 2 areas that we are involved in now, agreed upon procedures are becoming slightly more common, and reviews are also happening. Both of those are usually in the case where bankers reserve rights to, in the loan covenants, to appoint an investigating accountant, and that's why they don't require audit anymore. So I'll pass on that and we'll come back to that.
Brilliant, thank you. So quite a contrast there from France already. Let's keep moving along. Phil.
So we'll go a little bit north of Australia. And I'm going to pick up on one of Stuart's comments. There is life after audit. In Canada, up to 1986, every private company had to have an audit. And then in 1986, that was removed if all the shareholders agreed you didn't have to have one. And so, for example, General Motors in Canada, which is the sole shareholder is General Motors in the US, said, no, we don't need an audit of our multi-billion-dollar company, General Motors, which is our wholly owned sub. So there is life after audit. The profession, many professionals moved to reviews for their clients, but then the financial reporting frameworks started to get more complicated. And the accountants, the clients, and the auditors thought, well, or the reviewers thought, yeah, they're more complicated. Do we need all this complication? So since then, there's been also a wholesale move from review services to compilation services. So, and in the not-for-profit field, there are a variety of requirements for audit. However, the real requirement is that a not-for-profit organization really can't get anything more than a nominal donation, something over 10,000 euros, without an audited set of financial statements. Is there life after audit? Since the exemption was removed, our profession has probably tripled in Canada. I haven't met too many accountants on the street washing windshields and holding out coffee cups for money. So I think we're doing okay.
That's quite a relief, isn't it? The thought of accountants on the street washing windscreens. So, thank you. Well, obviously huge changes there, and I think the General Motors point really sort of struck a chord when we were speaking before about the real difference. Per, I think Norway is at the opposite end of the spectrum, isn't it?
Yeah, I think I come from a country with at least a lot of experience in auditing small companies because we have had statutory audit requirements for almost 100 years for all limited liability companies. And I think we actually is probably one of the last few countries that has introduced a threshold, and that happened only 3 years ago in 2011. And as you saw on the screen here earlier, the thresholds are quite low. But still, there is 192,000 limited liability companies that now can choose to not have an auditor. When it comes to the other assurance services, we have worked quite hard, actually, to see if there is a market, but I think it's very difficult. The market do not understand this kind of services when they are used to have an audit.
Okay, because the audit's been ingrained for a long time, I guess.
I think so.
Yeah. We'll circle back onto the impact a bit later on. But I think before we just move on, one of the things that I probably should have mentioned right as we started is there will be an opportunity for questions to the panelists, and you can send them in using the app. And I understand that an iPad will magically appear, and I can ask the questions to the panelists for you in a minute. But I hope that gives you a feel for just what a different, completely different landscape we're playing with across the globe. If I look at the far end of the panel there, we've moved from absolute micro companies in Norway through to General Motors in Canada not needing or having audits and not needing audits. Per, I think you were probably the most recent change. What's been the impact in Norway that you've seen when the threshold went up?
As I said, we have approximately 265,000 limited liability companies in Norway. 192,000 of them could choose to not have an auditor from 2011, and actually it's around 110,000 that have chosen to not have an auditor. So it's about 56%. And that tells me, first of all, I must say we are, at least I am, very disappointed that so many clients just choose to get rid of the auditor immediately, because that tells me that the audit product that we are delivering is not seen as having the value, at least not the value that they have to pay for it. On the other side, you could say that 44% of them still have chosen to have an auditor. So I definitely think there is a market for audits also when it comes to very small companies. There is obviously some companies, and they shouldn't have an auditor if you have, only one shareholder and that's the management and you have no bank loan, etc. Probably you shouldn't have an auditor. But as soon as it becomes a bit more complicated with several shareholders, maybe some external financing, etc., I think definitely there is a need. But I think the product that we are delivering today is not the right one. It's not tailored to the need of those companies. So I miss, also internationally, a discussion where we really focus on not just say that when the threshold go up, the audit goes away for those companies. I don't believe in that assumption, and I think it's possible to do something with it. But then you have to tailor the product to that market.
Can we perhaps contrast that with Canada, Phil? Because obviously you've been in that position for a long time. So,
it is interesting. The monopoly behind which we used to operate up until 1986 was great. It did generate fees, but as you said, Pierre, I'm not sure the clients were getting value for money. And I guess my perception now is that clients that have audits or reviews, it's very much a two-way transaction. We want to become trusted advisors. I think that's the sweet spot of the accountant these days, and was certainly raised this morning in the presentation. And in order to get that, we have to learn about our clients. From my perspective, the best way to learn about my clients is to get paid for it. And to do an audit, we have to have a good understanding of the industry, the entity, the controls. And then we really are, if you understand the business, you're now in a position to truly provide service to your clients. And I think that's tend to have happened as more accountants are perhaps offering less assurance. I still see they're experts in their industry, they're experts in their clients, and they're still providing value because there's a lot of accountants out there working very hard for their clients. So I'm not sure that we need the monopoly in Canada to hide behind for that.
Stuart, from your perspective.
Look, I think it was a benefit losing audit, to be frank.
Sorry, can I just say, I think you should repeat that, because
Sorry.
I think your microphone wasn't quite on, and I think that's a really important...
They were probably lucky out there. I think it was an advantage in Australia when they did introduce thresholds back in 1995. We were a very cosy profession, and when I started out in audit, and it was an assured line of work. We didn't have to think. It came along every year. It was recurrent work. We were lazy. When we did bring thresholds in, there was this, what are we going to do? But a little bit like your experience, it didn't all drop off at once. A lot of people stopped in the first year, but over the next 5 years, more and more people dropped it off as they just didn't see any value in it. Now that really moves on to your point, Phil, that if we don't provide value, people won't use us. And certainly in the SME sector, my experience was always a set of financial statements audited, provided 4 to 12 months after the year end was utterly useless for the businessman to use to make any improvements in their business. In my mind, it's far easier to go out to a client and sell value? How do we make your business more profitable? An audit doesn't do that. It's looking at the past. There's the old adage of you'll never win a game of tennis looking at the scoreboard. And that's what assurance is to some extent. What we have to do is concentrate on the new world that we live in. We live in the cloud. We have transactions happening, downloaded from our bank statements. My clients always wanted to know that their systems were right, that the information was coming in, that they could make decisions on a day-to-day basis. That's the area we focused our practice on, not on assurance. And the difference was that people saw value and were happy to pay for it. And I think that's something that the profession has to learn. We have to stop finding a product that we want to flog to people. We need to go out and ask them, what do you want, what adds value, and provide that service. My own practice stopped providing assurance in 2007, even when the thresholds were increased, because independence requirements stopped us from adding value to clients. Clients said, I don't want an assurance, I want management advice. It's a very clear message. So I think a real benefit in it.
Yeah, that's it's an interesting contrast, isn't it, between a country that is perhaps just entering at the early stages, and whereas I guess in the countries where this has been in place for a bit longer, the development that has happened around actually sort of selling the value of the probably still the same skills, but packaging. Philippe, in France, you're probably somewhere in the middle of these guys, probably literally geographically as well. But what's the experience? Because you mentioned about having 2 accountants involved. How has the practice developed in France?
Well, actually, the French regulation is very much depending on the European regulation. You know that it's for all of us. And what happened is that we had a new accounting directive last year on accounting. And, well, maybe you should think that there is nothing to say with the topic of this session, speaking of assurance. But on the contrary, it's very important. It's vital. It's the first step going to assurance, having financial statements. Because what happens in that process for the European regulation is that 3 years before, the European Parliament decided a full exemption for any small entity under 1 million of turnover and 10 employees. What was really shocking, at least for us accountants, it was shocking because how to manage a company without financial statements and how to give assurance for the stakeholders. Fortunately, we have a co-decision process in Europe since some years, and what was voted by the Parliament has been blocked by the Council, better said by the Member States. And it took 3 years, and we went to get a new project for the Parliament, and then the full exemption has been stopped, and they went back to an obligation of financial statements, but with a reduced burden. What was the aim of the first decision to reduce burden for small entities? Exemption of notes, for example, notes for financial statements, exemption of management report. But what has been the main decision and the most popular is the exemption of disclosure for financial statements, and what is very much appreciated and what was expecting the small entities. So now we are with the fully obligation for any kind of companies, what is good, and therefore we can provide our services like accountants to deliver insurance. And we did apply that in France immediately for the financial statements produced this year, 2014, for the last year, for the financial of the year before. So it's already in place, reducing burden for small entities, but maintaining obligation and financial statements.
Okay. It's an interesting twist, and we were speaking about that actually just earlier, because I think in many European countries, and certainly some others, it's very much the norm to expect some transparency in the public record of financial information. And what you're speaking about Philippe, is the reduction of pure financial information that is now available. But Phil, I don't know whether I think you're in a different position, aren't you?
Yes. Yes, in a much different position from a transparency standpoint.
Yeah.
In that we don't have, for the most part, our public companies have no filings, public filings at all. So their information isn't available to the public at large. But what I wanted to do, if I could just respond to Stuart for a minute. Stuart, you said that many of your clients weren't getting value from audit. Many of the clients that I audit are very tiny. We're talking under 700,000 euros, probably 8 to 10 employees, something like that. And in this field, they usually only have one manager perhaps, and very little financial expertise. As I often say, they wouldn't know an accounts payable from a potato. And so having two accountants is very expensive, one to do the books and one to, we don't do any bookkeeping, they have an independent bookkeeper. But what we find is that after an audit, the numbers actually look quite a bit different. And from a stewardship standpoint, from a not-for-profit board of directors standpoint, regardless of how humble these organizations are, the board members are finding that an audit really does provide significant fiduciary value. They actually know where they are, not where they just wish they were. So that's also a useful thing. Although many of my clients would rather have where they wished they were at the end of the day.
Yeah, I guess we probably all would, wouldn't we?
That's right, that's right.
And the potato.
And the potato, that's right.
Yeah, I know Blackadder Travels, it kind of reminded me of the what you get if you have 2 beans and 2 beans, which is a very small casserole. Moving on, I think that's really set the scene, I think, very well to some of the differences that we're seeing. But obviously, it's really raised the question around the value of audit that is perceived. And I think one of the interesting things when we were doing this planning was Philippe, in France, you explained that you have 2 different professional accountants involved, and I think it would be interesting to understand a little bit more of that, and then I think that you may well find some questions from your panelists about how you managed to get away with getting 2 sets of accountants involved.
The time for the French town has come.
Absolutely.
So, yes, actually the needs for the small business is very important. There is a lot of matters to deal, and the small company is waiting for an outside service, maybe much more than the large companies. And the French regulation is made in the way that being for advising and preparing financial statements or auditing and delivering an opinion need to be regulated. But we consider that they are 2 different assignments, 2 different missions, and that we do not need to mix them. So we define that with 2 separate roles. One for advising, preparing financial statements and advising the company, and another one, what is the chartered account, the expert comptable role. And that is a regulated activity. This is maybe the difference with other countries. This is totally regulated, included for bookkeeping. The bookkeeping is regulated with the same code of ethics and all the standards. So this is a regulated activity. And therefore, if the financial statements have been prepared by a professional paying attention to standards, then the role of the auditor is limited. Speaking of small companies, it's limited to deliver an opinion on the financial statement. And both of them are different roles, complementary, of course. And that is in order to help the small business, but to help the full economy, because there is a need to secure the small business. The small business, and that is not the case only for France, but for any kind of country, any country in the world, it's more than 50% of the tax collection. It's more than 50% of the employment. And the public authorities want to secure that, and they decided to have regulation. It is a strong regulation on the small business, and for us as a professional, we are playing or one role on the other one, but we are both of us together, and this is a complementary role in the interest of the business and the economy.
Okay, so the practice has grown up of having two professional accountants. Stuart, how does that sit with Australia?
That sounds strange.
Look, if one assumes that we need to have audit, it's a nice sidestep to say, how do you get around independence and provide management advice independently from audit advice? But that's prefaced on the view that you need to have audit. To my knowledge, there is no evidence that I've seen anywhere in the world that shows that the countries that don't have audit for their small SMEs have any greater failure rate than the countries that do have 100% audit. So one has to say, if you look at that, are we just not making regulation? Certainly the average Australian SME would shoot me if I was to say, look, I'll provide the management and accounting and you've got to get a separate auditor here. There'd be so much doubling up of time, of cost, and they'd say, well, I don't want the audit anyway. So I think it makes sense if you say that you've got to have an audit to break the independence question, but to be frank, in my view, it ignores the elephant in the room of why do you need an audit for an SME? Is there any evidence that there's less failure in the SME sector in countries that have low audit thresholds than countries that have high audit thresholds? I haven't seen any, so I find it very difficult, and if I find it difficult, I'd find it very hard to sell it to a client.
And I think you said the experience was that there's not a huge take-up of voluntary audit either. Is there just sort of joint ventures or something like that?
No, in Australia, certainly most people prepare accounts, but it's on a tax basis because it's useful. They need to, for a tax authority point of view. But the actual choice by the shareholders to have an audit is very rarely, unless there's a dispute in the company or you've got a number of joint venture parties that don't trust each other, they might ask for an audit, but it's a pretty rare occurrence.
Yeah, and you've probably got bigger problems if they don't trust each other.
If someone's asking for an audit, you've really got to say, is this business going to last?
Yeah. Phil, I know you have a different perspective on the SME audit values.
Yes, I do have a bit of a different perspective, and I'm going to once again talk about the really small audits. And you can have a bookkeeper, you can have one accountant and two accountants or whatever. What I see more and more, and actually I quite enjoy it because it's a great source of referral of new work, is that you get a micro entity that wants to have an audit or a review, and it's really tiny, and so the engagement partner sends out their least qualified person. So this person has no real understanding or experience in assurance, audit, review, and they're sending them out to a client that has no real understanding of accounting. So if there was ever a formula for disaster, it's sending a junior auditor out to a junior accountant and expect to get something of value. And so I don't really mind whether it's one accountant or two accountants or three or four. For the really small clients, you have to think about sending out senior people on the job, on site, talking to your clients, having direct communication. I walk into the offices of many executive directors, and you either got a clean office or a disaster. And you can automatically start to pick up things like that, giving advice if you understand the sector as well. So to me, it's not so much how many, but the skill level. And often the small and micro end are people send unskilled people and wonder why they make no money.
Per?
Yeah, and I think if you, in addition to having very good and experienced people out at the client, you could also have a product that is fit for the client. I mean, I think one of the problems today is that we try to sell a product to small companies which is actually not fit for that purpose at all. And I say that, I mean, I think we have to, at least we are doing it in the Nordic region now, we say, an audit is not necessarily an audit. And as long as you just try to sell an audit the same way as you do to the biggest multinational companies, I mean, you will lose. And therefore, we need not only to challenge that, but I think we need to look at the standards. And I don't think, but the problem we have in Norway with review, for example, is that look at the report you write. You spend 3/4 of a report telling what you haven't done, and you actually confirm nothing. And who is willing to buy for that? I will not. It's not worth anything for the small companies. So I think if you, and therefore in the Nordic Federation of Accountants, we have now put together a project where the ambition is to develop a new international standards for auditing small companies. And we hope next year to also present it to the IWSB, and maybe it could be the new product to really get audit up and going again.
Is that the Nordic Federation out there? We can't see, but yeah, okay. Phil, go on.
May I just take issue with this for a minute? So I have talked to many countries around the world, practitioners everywhere, and what is staggering to me, would any of you have a house designed by an architect who hasn't read the building code? Now, I'm not going to ask you to put up your hands, but how many of you out there have read all the audit standards that govern your lives? And typically what I get around the world is, well, I haven't, they're too big. Instead, I'm going to look at the generic reference materials, which are 5 times as big. I'm going to use a generic checklist. And the problem I have, Pierre, is that auditors at the very small end haven't taken the time to go through and figure out what they don't have to do. And in going through the audit standards, what we have done in our firm, there are about 586 requirements as of about 2 months ago. I'm an accountant, I added them up. But of those, only about 105 of those require attention in every audit. So yes, I understand an audit may not be an audit, but that's no excuse for not reading the standards and tailoring it.
No, but if you allow me, I mean, I agree with you, and we lived after that we implemented in Norway the ISAs in 1998, and we have had audit for all limited liability companies. So we really know what we talk about. And even in addition to that, we have developed this audit software that you can find on the booth up there in the exhibition, which helps you a lot to really follow it. But still, our conclusion is it's not enough. Because I mean, if you look at what IFAC have been doing, if you want to audit small companies, you not get the 333 pages of standards, you got another 350 pages of guidelines to understand it. So it's not 333 pages, it's 700 pages you have to read.
Stuart, I know, wants to come in.
I'd love to come in. I agree if you would, and I disagree with you again. I think you're missing the point, that an audit is of the past, and we move forward so quickly now in business that we're not interested in the past. You know, it's reporting on something which has happened, gone by. The world has got faster and faster. I'm fully in line with Pierre in the sense that we need to go out to clients and say, what do you want? And they don't want a lesson of what happened 12 months ago. They want to have assurance on what is happening now, day to day. Are their accounting systems right? Are their monthly management reports correct? Are they getting the right KPIs coming out? We need to start with a clean sheet of paper. And this is a problem with the accounting profession, is that we're trying to flog a product that no one wants in the SME sector. We need to start afresh with a clean sheet of paper, say what are the people's needs? This is marketing 101. What are people's needs? How are we going to fulfill that and design a new product for that? So I'm 100% on your side, and audit does have its place, particularly at the large end, and for some certain smaller entities. But there is the far larger portion of the market doesn't want an audit in the current form that we've got.
But I agree with that too, and I totally agree with you that the financial statement will not be that relevant in the future as it has been in the past. But still, I think you can use the kind of core audit product to just if you're having your accounting in the cloud, whatever, you can use the same kind of the basis to give assurance. But don't call it a review, because that's not what people look for. They look
don't call it an audit.
They always ask, can I trust this or can I not trust it?
Can I just cut across there, because we have got to move into assurance. Philippe, you can have a small comment.
Just a small comment to come back to what you said about the demand of the client in the market. When you're performing an audit, you're not responding to a demand of the client, excuse me, but it's like to ask to the Turkey what is thinking about the Christmas feast. Huh? No, it's not the case. You're working for the public interest. You're working for the stakeholders. You're working for the environment of the company. And you're delivering an opinion useful for the company, but not directly provided to the company. Therefore, you have to find some added value. I agree with that. Otherwise, it's a really burden. But don't forget that public authorities are waiting for a role for an independent professional, and that is the role of the audit and of the chartered accountant, independent chartered accountant for that.
Quickly.
And Sue,
The French are on your side now as well.
and Sue, I was just going to say, Canada being a bilingual country, of course, Philippe and Philip agree with each other.
Stuart, just quickly.
I think the big difference is the way that audit is seen in Europe versus some of the other countries. Certainly in Australia, the concept of producing information for the creditors and all of these other parties is not strong. Australia is a relatively new country, and the view is that if a creditor wants to deal with you, they deal on your terms, and if you want to deal with them, you deal on their terms. It's negotiated between the parties. There isn't that obligation that you have to audit the accounts and make them available for the creditors. So it's the way that we look at it, I think, which has a big impact on the debate as to whether we need assurance or not. Europe has a very different view than, I think, definitely Australia and New Zealand, I think also of North America. So there's really two dividing camps here, and it's how you see it.
Yeah. I mean, I think, that session, I think, has presented a number of challenges to a number of the people that I know are in the room, and actually to the SMP committee, of whom we have 3 up here on stage, because there are some quite significant differences and challenges there in the whole audit area, let alone before we move into some of the assurance services. So I think that's been really valuable and certainly highlighted the areas to look at. I'm conscious that the title is all about assurance, and we wanted to move on and talk about some of the assurance products, but I think it's so important because it sits alongside the whole audit, value of audit debate that we didn't want to kind of miss out on the audit part. We thought we'd probably just take a couple of minutes to perhaps refresh on some of the vocabulary, because there are a number of products that where there are standards around that we kind of use the terminology. So we're just going to take a minute to just run through a couple of slides on the just to clarify what the differences are. So if we could have the slides up, fabulous, thank you. This is really just highlighting the differences between the different types of service and the kind of report that comes out and the work effort, because I think as we start speaking about different assurance products, it's worth bearing that kind of thing in mind. I know Per has already mentioned the form of reporting that you have on review, which is important. So just working through that slide that you can see. Obviously, audit is where we've started off the discussion, which is a reasonable assurance product. And the work effort is all around risk assessment and designing tests and procedures that respond to that risk. And obviously, the report that comes out at the end is a positive opinion. The accounts give a true and fair view, or the present fairly in that kind of format. The review is next on the slide, and that was. I know, Phil, you've spoken about that quite a bit, and obviously led the project on that as well. Review is a limited assurance product, and the work effort on that, rather than being quite detailed procedures, is primarily inquiry and analysis, so a much less detailed kind of work effort. And the report, as Per mentioned, is a conclusion on basically saying that nothing came to the practitioner's attention that would mean that the financial statements don't present a true and fair view. And as I think you mentioned, there's quite a lot of material in there explaining what didn't happen. In the middle of the slide is an assurance engagement, which is other than an audit or a review, and that's something that can be either reasonable or limited depending on the nature of the assignment. The work effort is about assessing the appropriateness of the criteria that the tool has been used against. I think probably the most recent one we've been dealing with on this has been greenhouse gas or something like that, and actually with the current developments on integrated reporting, it's the kind of thing that may well fit into this kind of assurance engagement pool. And the report obviously depends whether it's reasonable or limited assurance. Next on the slide is agreed upon procedures, which Stuart, I know you've mentioned as being something that you see in Australia. That's obviously something where you literally just agree what the procedures are that you're going to do with the client. The work effort depends on the procedures that have been agreed, and the report is basically reporting on what has arisen as a result of the work that's been done. And then finally, the compilation, which is around the exercise of compiling the financial statements, is not an assurance product. The work effort is about the preparation of the financial statements, and the report itself says that there's no assurance provided. So I'm conscious that's a fairly quick run through, but equally I think as we start getting into the discussion of the different types of products, it's probably worth bearing some of those things in mind around particularly the nature of the reporting. And this is my IAASB plug, because we have a slide that shows the different IAASB non-audit standards that there are around some of these products. Phil, you're probably responsible for a number of these, aren't you? So, yeah, that's okay. So ISRE 2400, which is the review engagement standard, that's effective for accounting periods ending on or after December 2013. ISA 3000, which is assurance engagements other than audits or reviews, that's also been recently updated, and that's effective for reports dated on or after 15th December 2015. And then finally, the compilation standard, which has also recently been revised, which is effective for periods beginning on or after, reports ending on or after July the 1st, 2013. So there's been a lot of activity around these standards, updating them, making them relevant to the environment that we're in now. And I think that, as I say, that hopefully gives a bit of context for the next part of the discussion, which is really looking at the kind of non-audit services that are provided by professional accountants. Stuart, I'm going to start with you. You've already touched upon the fact that non-audit or audit services are limited. How do banks and people like that get comfortable? Because, as you say, the Australian economy hasn't ground to a halt. The SMEs are still driving this. So, how does this work in Australia?
Look, I've never known a bank that loses money easily. They're always very careful of their money, and Australia's no different. Most Australian banks are very heavy in the SME market on asset-based lending. So they tend to want bricks and mortar security. If they can't get bricks and mortar, they want stock and debtors, and they also want personal guarantees from the owners. They're always the first person in the queue, and therefore if a company ever goes down, they don't lose a lot to start with. So when we got rid of assurance or audits in Australia, banks adapted very quickly to that. At the SME end, they basically brought into their banking documentation usually a number of covenants which are basically how they manage the business. And they also usually have in the banking documentation a right to appoint a investigating accountant at their option and at your cost at any time in the future. And it's not that they appoint them very often at all unless there's something going wrong. But where they do appoint them, it's usually an independent accountant, and it really usually ends up as either a review or agreed upon procedures engagement. And whilst it doesn't happen very often, at the bigger end of the SME market, that gives them the security to come in, have a look at the business, make a decision. It works well for them because if you take an agreed upon procedures, they're only interested in their security. So if they know the buildings are there, they know that the stock's there, and they know the debt is there, they rank before all the creditors, so they're happy. They've got a really very limited need of what they need to know. So there's been no impact in Australia of not having audit at the small end of the SME, and the banks have adapted very easily to that.
So they're not looking for different kinds of assurance because basically what you're saying is they're not that heavily exposed, really, are they?
They're not very badly exposed. They always have the security over everything else. I don't think I have a large write-off at the small end. They actually tend to write off more at the larger end, which are audited.
Philippe, you spoke about the involvement of another professional accountant with the auditor, but I think you managed to avoid the question about how companies deal with the cost and how do you sort of sell the value of the services of two professional accountants in there.
There is a difference between duplication of skills and duplication of costs. And we are, of course, the French SMEs are not ready to pay more than any other SMEs in the world. They don't get more money than that. When you're providing and performing an audit, depending on what has been done before, if that is not being performed applying standards and with independence, you will have to fulfill with the ISAs a full audit, because we will need to control everything. But in the other case, if preparing financial statements, including bookkeeping, has been made and done applying standards, then it's much more comfortable for the auditor. And that is reducing his time for performing the audit and to conclude on his opinion. And the result is that the cost of the audit is much more lower. Do you know how much is the cost of an SME? The average in France of an SME audit is about 4,000 euro. Let's say $5,000 a year. That's nothing for the skill you bring, for the assurance you're bringing to the company and to the economy. So it's not expensive, and we are very careful to the cost. Well, our opinion is that we think that two skills are better than only one. And we are doing that even for large companies. You know that France is practicing joint audit. It's not the place where to speak of joint audit. But joint audit is duplication of skills, but not of cost. Because the total amount of fees is the same. It's divided by two. That's the point. So duplication of skill is security for everyone. And we are on that conviction that it helps the business, including the small business. And our institute, the Compagnie Nationale des Commissaires aux Comptes, designed a special tool for performing audit for SMEs, applying ISAs. We call it PAC, Petite Entité, Small Entities, in order to help the professionals. So we have that experience to reduce the time and the cost. So we are very much in line with our Canadian friend, Phil. We didn't reach 12 hours, but we're on the way to, and you're an example for us. And we have a good experience on that. So, and I'm delighted to hear that our Norwegian friend has appealed for ISAs for SMEs. We have, in France, we are applying ISAs, but we have added to these ISAs some national standards. And one of them is how to adapt ISA to the international standards to the SME. So we are reducing the burden, and that is possible because beforehand you have the performance of a chartered accounting applying standards too. And both of them are the right combination, and that is not costly.
Yeah, it's interesting that we have two professional bodies up here who have both developed tools around that area. So, Phil, you're going to be a complete hero with one of the audience, because actually you're just about to answer one of the questions that's come in before you even knew about it. But it was already on the list, because you've spoken about review engagements in Canada as having developed perhaps as the market has matured. Can you tell us a bit more about that and how that operates?
Yeah, it's so the review engagement, as many of you know, is sort of less than an audit, as Sue mentioned, primarily analytical review and discussions with clients and that type of thing. And it really blossomed after the exemption level came down from audits. I would say, just as an estimate, the cost is somewhere around 60% of an audit. And some of the challenges around the International Standard on Review Engagements 2400 is that, yes, it is primarily analytics and inquiry of the client, but if you sense there's a problem, then you must dig deep, and you must, to the extent where you can say, yes, nothing's come to my attention, there's a problem, or yes, in fact, there is a problem that I have identified. So the review engagement, even though it's a little less intensive than an audit, the conclusion is still, I come with specialized knowledge, I am a qualified professional accountant, I have followed a whole bunch of requirements. The engagement is risk-informed. It's looking at the challenging areas primarily. And based on all the work I've done, I haven't found anything wrong. So some people call that a negative opinion. I don't think that's negative at all. And in fact, in many respects, I think doing a review from a professional standpoint takes far more assurance, skill, and expertise than an audit, because you actually have to really understand your industry to ask the right questions, to do the right analytics. So I have very positive comments about the review, and it is not an audit. It's much easier to wrap your mind around the number of requirements. It's not 580 plus. I think it's about 40 or 50, and most of those are reporting. So it's been a success in Canada, but it is again being rolled back. A lot of practitioners in Canada are going with the compilation because they don't want to fail their practice inspection for deficient financial statements.
Per, I think you had a different view given where you are at the moment.
I mean, we have only 3 years experience, but for many years we have. I mean, the reviews are working very well to look at the quarterly reporting for the listed companies, and it's heavily used in our market, and it works very well. Our experience so far in the low-end market, it's very difficult to communicate, and especially because the way you report. Because people ask us, can you trust this financial statement or can you not? And that's actually what I would have asked also if I needed something. So maybe you are obviously right that there can be some value, but I think it's difficult in our market. And also, I mean, agreed upon procedures is obviously not working for financial statements, but we see that there is some need for compilation. At least it's quite common in Norway that either the auditor or external bookkeeper helps the client with preparing the financial statements, because none of them can do it themselves. And we have produced, or we have prepared, a kind of reporting, a compilation report. It's not similar to the international one because that is not working in our environment, but it's something that is in the same area. But there has been very little requirements for that so far. So I think I don't think, and I think then it's better to try to work around it and find other services to focus on. But we still think, or I still think, and I wish, I mean, in an ideal world, you shouldn't need any statutory requirements at all for an audit. I mean, people would love to buy it if we can manage to deliver it the right way.
Yep.
Can I just make one brief comment about the compilation? There was a really interesting survey done by the AICPA. I think it was 2003 or 5 or something like that. And they surveyed a whole bunch of banks, and they said, what would you rather have, an audit or a compilation? And in the United States, the compilation is done by an independent accountant, I understand. And they compile, and they said, well, we give much more assurance to a compilation because the independent public accountant actually did the work, all the work. Not just gave a report on the financial statements. So I thought that was very, from a compilation, no assurance given, but definitely assurance taken.
There's an interesting distinction, isn't there, between given versus received or inferred.
Yep.
Yeah.
Your letterhead is right there.
Yeah. One of the things we've done is sort of focus on obviously the services provided by professional accountants. But I mean, Stuart, I wondered, given the environment you were in, and you're saying that there's not much that's being given by accountants, are there non-accountants that are coming into the assurance market? Are you seeing sort of threats from other professions?
Yes, Sue, that is something which is just starting to happen. In Australia, what we've seen is the number of registered company auditors reducing quite considerably. And because we're a large country and geographically diverse, in many rural areas, it's very hard to find a registered company auditor. So what's happened over the time is that a number of the acts that I referred to at the beginning now allow for non-accountants to do audits of certain entities. So, for example, associations, which are regulated under the state acts, have a tiered structure, but the lower tiers can be audited by a non-accountant. So that's someone who's not a registered public accountant, or in fact not even a member of one of the professional bodies. Also in superannuation funds, which is a very large and growing area in Australia for self-managed superannuation, to be a registered superannuation auditor at the lower end doesn't necessarily require you to be a registered company auditor or a member of a professional body.
Right.
So these, particularly the superannuation, which is a very large growth area, we're starting to see a number of non-accountants coming in, and I think that'll be a trend that will continue because a lot of accountants are dropping out of being registered company auditors.
I think that's covered an awful lot of ground on the kinds of assurance services that are being provided, whether it's by accountants, non-accountants. Per, you mentioned the state bookkeepers. Philippe, the position with providing different and having two professional accountants involved. I'm conscious we've sort of covered a huge amount of ground. Probably the challenge now going forward is actually about what should we as a profession be doing about some of this, because there are very, very different markets, very different perspectives and needs, I think, in there. So what should the profession be doing in this area? Stuart, I think I'll start with you, please.
Well, I've already touched on this slightly, Sue. I'm just coming, sorry. I've already touched on this slightly. I think there's a lot that could be done. As the point was made earlier, that a lot of the skill sets that we have in assurance are adaptable and useful elsewhere. I think most of us will find that we started in assurance and it was the backbone of learning to be an accountant. It helps you understand businesses, how they operate. So that skill set is very, very valuable for clients. We probably underestimate some of the areas. Our systems approach is extraordinarily valuable to people setting up systems. And I think what we need to do is look at a new product. A lot of companies in Australia talk about the one source of truth in their accounting system. I love that phrase because that's what accounting is about, is making sure that the accounting system produces a correct representation at any point in time, not after the event, that the systems are working, everything comes through, you don't have 5 Excel spreadsheets, 3 ledgers telling you different results. It's bringing all of that together, and that skill set many SMEs don't have. And I see that's an area where accountants can get very involved in their SME clients, is setting up the accounting systems, getting them operating on the cloud in real time, reporting back, making sure the data's there. I actually see our assurance services almost as a new product there of certifying someone's system, not as to what the results are, but the system going forward to produce the right results. So I think we can start thinking as accountants of, well, what do our clients want? What will they pay us for? And we remember when we're talking about SMEs here, it's not as much public interest as it is about the small mum and dad or the small business owner that is paying the money and wants to return. So we actually can turn our assurance skill set into money-making opportunities. I know I've done a lot of work in the past in setting up costing systems. Now, setting up a costing system for a client is absolutely essential for them to price. But setting up a costing system is a lot about assurance skills. So there is a cross there, and a lot we could do to do that.
That point about the skills and actually, you know, turning the whole debate the other way around in that the skills and the value that those skills provide, I think is really, really important. Per, can I perhaps come to you?
Yeah, I think there is one big challenge for the profession going forward, and that is the technology development that we see right now. And I think that will create so many changes also in SMEs, the way you do business, the way you control your business, the way you report from your business and everything. So I think that's probably the biggest challenge we have, to manage to adapt our services and products, etc., to that changing environment. And then I have to repeat what I said earlier. I think we have to, there is an opportunity to create a product. I mean, it has been the core product for us for many years. And I'm not saying that, and I'm convinced that we cannot have the same product going forward as we have had in the past. But there is so many opportunities. If you manage to develop a new, good, tailored product that meet the needs in a better way for the SMEs, you can build on that to really build a new portfolio of services that can, follow your clients into the future. So I think that, we cannot give up that thought, it's my view. If not, we will not have any assurance at all in 10 years' time. Then all of us will be tax consultants, management consultants, whatever. And I'm not sure that is the right track forward.
Yeah. The evolution and recognising the change, I think, is so critical there. Philippe, your thoughts on what the profession should be doing?
Well, the main role of the profession is to bring security, to bring assurance, to bring reliability and credibility on the financial statement, that's for sure. And how to perform that and how to do better. When you're performing non-audit services, this is valuable for the company, and it is perceived and received as such. But when you're performing an audit service, that is valuable for the client, but it is not received as such. And it is not his fault, it's our, maybe to better report, to better communicate. The main interest for the audit service is to look for deficiency, for risks in the company, weaknesses, and that is not a demand of the company. Coming back to the demand of the market, they never ask you for that. They are not ready to pay you for that. But if you want to fulfill the ISA, you have to look for risk and to analyze and to provide a good analysis on the risk. Therefore, I think that the good value for the auditor should be to better report on that service is performing on the risk, and then to, let's say, advise, because we're coming to how to better perform the client. So I think that our profession has to think again about how to communicate first to our client, but on the other hand, to the environment. And our main force and our main argument is the independence. We should be independent in any case, of course, being the auditor and providing the opinion, but on the other hand, providing non-audit services. I think that independence is a key role of the profession. So this is not to be negotiated, and this is our force compared to other professionals.
Yeah, it is something that's important not to forget, isn't it? It's what we bring, the core of the profession, the independence. Phil, your thoughts on the professional actions?
I guess I would go back to the old chestnut of you have to add value and act in the public interest at every turn. And for my area, at the smallest of the entities, the micro entities, I think what that looks like, there are three things I can say very briefly. First of all, the first thing is that you communicate with your client, and when you're tired of talking, you communicate with your client some more. Asking questions, doing the work on site, using appropriate staff, not putting your most junior people on, developing some expertise so you can actually talk to your client, find out, as Pierre says, what are they looking for? And if it's developed within a service such as audit, then that's great. The second thing I would think of is really to understand the professional standards that we as professionals must embrace. These are not something that people in ivory towers have dumped on us to make our lives miserable at all. They are truly representative of best practice. And if you follow your standards, you will minimize the risk, your professional risk on the job, and will go a long way to aiding client service. And the last thing I would say is you need to make some money doing it. All my clients are not-for-profit, mostly. People say, oh, Phil, you're a not-for-profit accountant. I say, no, I'm a for-profit accountant. My clients are not-for-profit. So if you provide, and as Stuart said, if you provide value, they will pay you for it. And again, once again, automating your practice, taking advantage of technology, just to every available opportunity, not at the expense of communication, and using appropriate staff. Again, it's all the same things, just being smart as SMEs, as we are. SMPs are SMEs.
Stuart, I know you wanted to just follow up. Yeah?
Follow up on what Phil was saying.
Excellent.
Is it for or against?
I just want to really add a little bit to that. I think your point on communication, I think, is critical. And the point has been made that an audit is a great opportunity to go out and talk to your client. It's just a pity that when you go out and talk to them, that the independence requirements stop you from servicing them. So I think that is a major problem. But going forward, what we have to look at is that audit is often seen, well, many people I speak to see it as a high-risk, low-profit product. And we've really got to turn it to a low-risk, high-profit product, which goes back to your point. And that's what we need to start working on. We talk all about risk and return, but we're not applying it back to ourselves. So that's the area I'd encourage the standard setters to start looking at. They're getting the right weighting between the risk and return, otherwise there won't be a future for the profession. Because as thresholds lift, and it's no doubt they'll continue to lift higher and higher. We may have been there a long time in Australia. You might be starting only just now, but I think we can all guarantee that in 10 years' time, all our thresholds will be much higher.
And it circles back to that discussion we had about the value, doesn't it? Selling the value.
It's all about value. So let's use that time as a profession and not wait till we're kicked out, but do something now to get in front of it.
Yeah, brilliant. Per, very quickly.
But I think there is another perspective also when you talk about the big companies and the small companies, and you talk about public interest, you talk about independence, etc. And of course, if you apply the rules exactly the same when you're dealing with a listed company as you do when you deal with a very small company, you very soon get into trouble. So I think, obviously you have to think of the public interest, but I think maybe if you try to share the perspective, I will say in listed companies maybe 80-90% is the public interest and 10% is the client. If you go to the small clients, you probably have to turn it around. And we haven't done that in the past, and that's one of the problems with the way we have delivered the audit in the past.
Yeah. Thank you very much, guys. I'm conscious you're getting a lot of applause. Your fans are out there, yeah?
And you.
I have a couple of sort of concluding points just to help you with some of the actions that IFAC and the standard setting boards are taking already. So we have some IAASB developments to just put on your agenda There is I spoke just earlier about some of the updates that have already happened to some of the standards in this area. There is a possible revision of ISRS 4400 on agreed upon procedures that's in train. There are monitoring activities around the adoption and implementation of the review and compilation and the 3000 standard as well. There is a project on professional skepticism, which, although in some ways sort of starts from the public interest end, I think really draws very strongly on what's been mentioned about the independence and the value of the independent accountant involvement. And so clearly there will be SME strands in that. And actually, I was on a telephone call about the quality control project, which has just started, which is looking around some of the practices that I think can be challenging in the SME environment. So there are a number of initiatives that are already underway, I think, to help underpin some of that. You've obviously heard about some of the initiatives that are being conducted in other countries. And there is a number of areas where there are resources available through IFAC and its various bodies and the independent standards bodies. So there are some support materials there that are highlighted on the slide for you. So I think with that, I will draw the discussion to the close. I think I've certainly taken away a huge number of pieces of food for thought. I guess what we've seen is the tension between the audit for SMEs versus the assurance or the need for neither. And the big message for me coming through was all around the value of what the professional accountants add, irrespective essentially of how you package it, that is what there needs to be a focus on. The skills that the professional accountant has that can be packaged in a way that is relevant to business, the need for us all to evolve because business is evolving and obviously what we do can't stand still. And actually a point that was made about the communication as well. There's been a lot of work on communicating the output of the audit reports, but the communication of what's done in the SME environment as well, I think, is quite critical. So I think with that, I'd like to ask you to thank the panelists. I think they've put a huge amount into this. And I have just one final note before you all rush off and get your tea and coffee, which is an administrative announcement for the next session. There's been a room change, so if you were attending session 1.13, which is around member bodies, that is now in the Coro room, and if you're attending 1.15, which is financial reporting for not-for-profits, that's in the Petrassi room. Thank you all for your participation.
May I add a comment?
Of course.
Yeah, just to conclude, just to tell you, Sue, thank you very much for your job. Just wanted to tell you that next year France will be delighted to come to England for the World Cup, and that we will apply the standards, but will be do it by the French way.
Thank you very much. Thank you. Thank you all, and thank you all for your questions. I have been feeding them in as we've been going, so enjoy your coffee. Thank you very much.